Good morning, everyone. In this part of the video, we will discuss about cost classifications. So as this is the first part of the module, so let's see some initial information why we are calculating cost, or basically what's the purpose of accounting, what accounting does, and then we'll start the cost classifications. So accounting is a process, is a system where we record information in the books of accounts, and then we provide those information to the interested people who are interested to know about a concern, about an organization. So accounting is a process of some steps, some activities, which may we discuss in a separate video, what we call accounting cycle, the activities that actually moves cyclically. So where we identify the transactions, we record the transactions, we prove that the recording is accurate, then we prepare different kind of financial statements, and then we analyze those information for communicating to the interested people so that they can make necessary decision for the organization. So the first step is to identify that a transaction, an exchange of any monetary things happened in the organization. So we identify the transaction based on different checks, receipts, invoice, something like that. So why we record this, why we prepare these financial statements, why we generate these accounting information to communicate them to the interested people, to the stakeholders. So in accounting, we divide the stakeholders or interested users of accounting information into two classes. We can say easily it is internal users and external users. So the internal users means the people who are within the organization, and external means the people who are outside the organization. So if we talk about financial accounting, the information that we generate in financial accounting goes to actually mostly to the external users, the people who are outside the organization, like investors, suppliers, banks, government, clients, customers. Yeah, so the people who are outside the organization. But management accounting, actually, the module that we are talking now is about managing the organization, using the accounting information to manage the organization, to run the business profitably, successfully. So it's actually the people who are inside the organization. So management accounting is a part of accounting which facilitates the decision-making process of management by providing necessary information. So we calculate different cost, different prices, so that the management can make right decision. So before we classify the cost, we can define what is cost object, why we calculate the cost. So we calculate the cost so that we know what's the cost of a product. We know what is the cost of a process. So when we manufacture something, how much cost we have to spend for a labor, for a machine, for a system. Okay, so cost object can be recognized as an activity, as a piece of work for which we can measure an amount of cost. We can determine, or an user of accounting information can identify where this particular amount of money has used. So there are some examples here you can see in the slide. The cost of a product, as I just mentioned, the cost of rendering a service to a bank customer or hospital patient. So if you go to a hospital, if you go to a bank, so how much a bank need to spend for its employees or an employee to provide a service to its customer? How much expenditure a hospital need to spend to provide the service to a patient? Or cost of operating a particular department. What's the cost of a department? Sales department, manufacturing department, or different departments. How much cost that particular department needs to run in a particular year? So why we need to calculate this cost is not only to know about the cost, is also to try to reduce the cost, to make the organization more competitive in the competitive market, to reduce the cost so that the organization can increase its profit. The organization can reduce the price of the products. So cost is lower means price can be lower, price can be reduced. So that's why we determine the cost. We calculate the cost. For appropriate cost calculation, we divide the cost into different classes to maintain or to improve accuracy. So as you can see, the cost can be primarily divided into manufacturing cost and non-manufacturing costs. So manufacturing cost includes three elements: so direct materials, direct labor, and manufacturing overhead. And direct material and direct labor are the main components of a product, which actually needs the significant amount of cost, significant amount we need to spend. That's why this is being recognized, these expenses together recognized as prime cost, main cost, important cost. And direct labor and manufacturing overhead, these are the cost, these are the systems, these are the people we need to convert the direct materials to the finished products. So we produce the products from direct material. So direct material is converted to finished products by using the labor and overhead. That's why these two expenditure, direct labor and manufacturing overhead, combinedly known as conversion cost. We will discuss all these probably in the next video. What is direct material? What are the examples of direct material, direct labor, and details of overhead as well? So non-manufacturing cost can be divided into two classes, or non-manufacturing cost includes two broader aspects, two broader classes: administrative overhead and marketing overhead. So based on the activities, we divided non-manufacturing into two parts. So one part of the expenditure basically spent in the head office, which are recognized as administrative expenses, official expenses. The other part is relating to the sales office. That is, we can say selling and marketing, or marketing and advertisement expenses, selling and advertisement expenses, or marketing overheads. As we say, the overheads, basically administrative overheads, marketing overheads, manufacturing overheads. So what is overheads? So overheads are known as indirect expenses. We can say the direct material and direct labor, these are the direct expenses. So what are direct expenses? That we can directly trace, directly identify, directly plan relating to a product, a process. But some of the expenditure, either manufacturing or non-manufacturing, we cannot directly estimate, directly trace, directly relate to a product or process. That's why these are called indirect expenses. Manufacturing indirect expense or manufacturing overhead, and non-manufacturing overhead or administrative overheads, marketing overheads, something like this. So direct expenditure can basically directly increase if we produce more, and if we produce less, direct expenditure, actually we need less. So it increase and decrease basically relating to the volume of activity, volume of product. But the overheads or indirect expenses means these are not directly relating to the volume or activity. So the cost can also be divided into two based on, as we said, manufacturing and non-manufacturing. So the manufacturing costs are actually relating to the products volume. Directly we charged on the products. That's why these are being recognized as product cost. And non-manufacturing cost cannot be directly relating to the products, but mostly these are relating to the period, time period. So if the time passes, for example, the rent of an office doesn't depend on the volume we produce mostly. It depends on the time period. For a month, we have to pay some rent. For a year, we need to spend something. For the permanent employees like sales manager, production manager, we need to pay something relating to the period, time period. So the cost that is relating to the period, not on the volume of activity, are recognized as period cost. So the product cost can be divided into two again for preparation of the financial statement. Basically, when we need to calculate the profits from the products that we sold and the product that we didn't sell yet. Okay, so this is actually, so if there is any cost that is not sold, is recognized as inventory. So some manufacturing cost may still remain in the inventory, and some manufacturing cost can go to the product that we sold. And the product that we sold is relating to a particular period, which goes to the period cost. All right. So we will talk about the cost system and particular aspects of each and every element of the cost in the next part of the video. Thank you for watching.